Hey, everybody. Welcome back to our monthly market commentary. I'm Brad Gotto, owner and founder, CEO of Fiat Wealth Management, here as always with my buddy Tim Holland, the CIO of TownSquare, Orion. Tim, welcome back, and thanks for joining us for the April monthly market commentary.
Good to see you, Brad. Good to be here. Appreciate the opportunity to chat about the markets. And before we get going, how about those Hawkeyes?
Let's go.
Caitlin Clark, right? Do you have the Hawkeye thing back there? There you go.
There it is.
Man, that young woman can play basketball. So
Been
just
a lot of
incredible.
fun. We offlined this for a little while, so this did become a 15-minute conversation because you know me, I could talk about my Hawkeyes all day. But change in women's basketball. You know, you get these generational talents that just have that sixth gear that most athletes don't have, and um, that's what she's doing. It's been a ton of
Yeah.
fun. The LSU game was a big deal for me, taking down the team that beat us in the finals last year. So, but now we got the dreaded UConn. Gino, I
Yeah.
think his 24th Final
Something
Four he's coaching
crazy.
or
Yeah.
something ridiculous.
Yeah.
Just crazy. So it should be a good game Friday night.
Oh, for sure. And I think it's kind of, you know, I'm new to the whole Caitlin Clark phenomenon and what she's doing, which is just awesome. But winning is great. Winning's better than losing. And hopefully, I'm rooting for the Hawkeyes and that they'll go all the way. And hopefully I'm not sort of making anyone
And
mad
that's
who's
all we
watching
needed
this.
to hear. Great to talk to you, Tim. He's rooting for the Hawkeyes. We'll see you in
But,
May.
but I think it's cool when you sort of with the LSU game, when you go through sort of the team that knocked you out before. So hopefully, I mean, they still have a lot of work to do, but when you it's sort of like the Capitals in hockey finally getting through the Penguins or the Red Sox
Yep.
finally getting through the Yankees 20 years ago. Winning is always awesome, but when you go through the team that sort of knocked you sideways and you
Yep.
get it done, that's pretty cool. So hopefully they can
Yep. And they
hopefully
did
they can
it
get
in
it
pretty
done.
convincing fashion. No, the
Yeah,
road could be even tougher, right? You've got UConn with Paige Beckers, who you can
yeah.
make an argument is, some people put her above Caitlin for best player she's actually from the Twin Cities. Paige Beckers
Oh,
is.
neat.
I think she's from Hopkins, which is like right down the line. And somebody is going to rail on me for that if I'm wrong. But I know she's from here. Maybe it's not Hopkins. But then, assuming they win, if they were able to win that game, the odds are in favor. They're going to play South Carolina, who hasn't lost a game all year. They're 36-0,
Wow.
I think. And the Hawkeyes don't have size, and South
Yeah.
Carolina's center is 6'7".
Wow. No, LSU really gave him fits inside, second and
Much
third
bigger
shots
team.
and putbacks. Yeah,
Yep.
no, I didn't know that about South Carolina. So it's gonna be a tough road, but I've got
It's
my
going to be
fingers
tough.
crossed.
Go
Yeah.
Hawks.
Go
Um,
Hawks.
All right. Nobody thought they were turning into a Hawkeye commentary. We're here to talk about the markets. But
Sorry.
thanks for allowing me and indulging me for a couple of minutes on that. If you're new to the monthly market commentary, we always do 3 points: a look back at the month prior, a look ahead on what's coming up, and then just a data point worth discussing. And so, as always, we're going to start with a look back. And this point, Tim, I'm calling off to the races. And
Yeah.
so, our look back is kind of a March look back, but really a Q1 look back, because while we had a good March, 3.2%, really I want to look back at the whole start of the year because the S&P is up over 10%
Yeah.
year to date. So what in the world happened that the gates opened to the Kentucky Derby, so to speak, and we're around the first corner and in the lead? What's going on?
So
What's
we're
curious?
mixing our sports metaphors. We got
Yeah.
basketball,
I mean,
horse.
come on.
I like it. And I've got some cheat sheet up. So and I can't see anything anymore without my glasses. So you're right. It was a great start to the year. I think the big thing was just earnings came in a bit better than expected for Q4. Nvidia was the big story.
Yep.
Right, their Q4 numbers were sort of beyond phenomenal. They grew revenue 250%. They grew earnings 12-fold year on year. And the other thing that happened, which is a little bit coming undone right now, is that the bond market behaved itself. Bond yields sort of moderated around 4%, and fixed income even had a good March. So I think it was just earnings, better than expected economic growth, but not concerned, at least through the first quarter, that we were running so hot from an economic perspective that the Fed still couldn't cut rates this year. So I think all those things taken together, a bit of a Goldilocks environment, got us to some phenomenal start to the year. And the one point I would make, and past isn't always prologue, but I came across this yesterday. Um, so there have been 16 times since 1950 that the S&P has risen 8% or more in the first quarter. And only one time out of the 16 times, and this was 1987. For those of us who remember 1987, Black Monday, there was a
Yeah.
crash that year in the fall. Did the index lose ground for the rest of the year? So 15 out of 16 years, the S&P gained another 10%, knock on wood, in the subsequent 3 quarters. So just because we've gotten off to a good start doesn't mean the market can't continue to grind higher. We're pretty optimistic around earnings, around equities. I think the big question is sort of interest rates and the Fed and inflation. But if history is any guide, that strong start bodes pretty well for the rest of the year, sort of, knock on wood.
And I'm literally gonna throw a bomb into this conversation, then tell you
Okay.
not to to deal with it, because I know this is gonna be a big part of future monthly market commentaries. But we got this tiny little thing called an election coming up
Oh
too
yeah.
that might have
Oh yeah.
something to say about which. I'm just curious how, because your data is interesting, 15 out of 16 times. I
Yeah.
wonder how many of those times were in election years.
I don't
Um,
know. I will go back and look. That's a really
Especially as
good question.
contentious as this election, I think, is going to play out to
Yeah,
be.
yeah. Maybe President Trump and President Biden could just have a 3-point shooting contest and just decide it that way, right? Some of those logo shots
Oh
that came
man,
in.
there's a lot of jokes there that I'm also going to leave alone.
So,
Um,
but that's a good question. I'll go back and look and get that data.
Long story short, it's been a great start to the year. And I love the language you used of kind of a Goldilocks scenario. Things
Yeah.
kind of came in just right.
Yep.
And it's my opinion, this doesn't make me right. The bond market could have been the thing that kind of upset it all, right? Because
Yeah.
the equity markets did exactly what we wanted them to do. The bonds, to your language, behave themselves, which is interesting through the Q1, because as we're
Yeah.
going to talk about a little bit in the look ahead in the next point, and I want to steal that, but this is a great segue. It's April 3rd as we record this. We're
Yeah.
barely into Q2.
Yeah.
That started to change a little bit.
Yeah.
So let's
Yeah.
lead that into our point two, which is a look ahead, which I'm calling April showers bring, well, nothing.
Yeah.
April
So
is a boring month
it,
because not only do we not have any earnings coming in and kind of big data, so to speak, on the equity side of things, there's also no Fed meeting. And so we have no kind of big macro expectations from the Fed this month. Yet there could be some news coming out of April. And so a little misleading to say nothing,
yeah.
except you and I have talked so much about the Fed the last 6 months. Earnings have been big in Q4 and now in the earnings period in Q1 here. So talk to me a little bit about what to expect in April and go back to kind of the bonds behave themselves in Q1. What's going on now?
Yeah, no, it's only, to your point, it's only April 3rd. And, we took pen to paper on this a couple of days ago. And to a certain extent, it's not out of date, but sort of the bond market's been a little friskier last couple of days for sure. So April is a quiet month, right? The Fed meets the last day of April, but doesn't announce anything coming out of the meeting until May 1st. Earnings really don't kick in until May because it takes about 4 weeks for companies to close the books for the end of Q1. So our experience has been when you have those kind of quiet periods, there's not a lot of news to drive the market. There's not much of a narrative. So markets can sometimes get a little more volatile as folks try and get a sense of sort of where things could go in the absence of hard data, if that makes sense. And so as we sit here and record this on the 3rd, the yield on the US 10-year note has hit 4.4%. So it's up 20, 30 basis points or a percentage of 1 point out of 100 over the last couple 4 or 5 trading days. And really what's happened is earlier this week, we got some manufacturing data that was a bit better than expected, some manufacturing pricing data that was a bit higher or hotter than expected. We've gotten some jobs numbers, not the big number, which comes Friday, but the ADP report and the JOLTS report, which showed a pretty robust labor market. So I think right now folks are a little worried that maybe the Fed, which has indicated they will cut rates 3 times this year, and when they stuck to that in the March meeting, that really boosted risk assets. Maybe the Fed can't go 3 times. So I expect some volatility because we don't have any hard news. But later this month, we will get this consumer price index and the producer price index for last month, and that'll give us a pretty good idea of the trend in inflation. If those numbers come in a bit more benign, I would expect the markets to respond very positively, because I think that is the one big risk, as sort of counterintuitive as it sounds, that the economy is too hot, inflation pressures are too strong, the Fed can't cut. If we get the all clear with some of the inflation data, I think the markets will respond really well to that.
Yeah. So long story short, inflation is going to be the thing to watch here.
Yeah.
Because the anticipation of, it's funny how, because when we came into the year, the markets and the Fed were not on the same page relative to rate cuts. They finally got on the same page. Now we're at the risk of the Fed having to change their mind because of the way the economy is running. And so it's just like the second you got your two kids to actually agree on something, one of them's starting to change their mind. It's almost, it's just like,
You've gotten your kids to agree on, you're doing better than
okay, I just made that up to make the rest of the parents feel better.
I'll pay for your plane ticket to Philadelphia if you can help me out with Grace and Spencer, because you're doing. I have no doubt you're doing a better job than I am. But yeah, look for the plane ticket. It's coming.
Parenting, right? That's a whole other podcast.
Oh man.
All right. So our data point worth discussing. I'm calling this month. Maybe I should buy a Tesla. And so what I want to talk about is not just that Tesla is slashing their prices and EVs are becoming cheaper, which that's a whole nother conversation on whether you buy into the EV markets or not. This is really just about gas prices.
Yeah.
Because, and we've all seen this already and felt it already. If you've been to the pump recently, which I have, gas prices are changing. And so talk to me a little bit about that and why we should care.
Yeah. So according to the folks at AAA, the national average, and I know different people in different states pay very different prices at the pump, but the national average is up.
I got to ask that curiosity. What is it by you?
It's lower than the national average. It's closer to 330. The national average is 353. California and some other states are sort of meaningfully higher. How are things in the great state of Minnesota?
I think 345 is what I filled up for the other day.
Yeah. So we're a little bit below you, a little bit below you guys. So according to AAA folks, national average is about 353. It hit 430, 440 during the worst of the spike during 2022, actually 465 on a national average. And the folks at AAA think prices are going to get to or a bit above $4 a gallon on a national average basis sometime this summer. There's some supply issues given the geopolitical dynamic for sure. And as I look at the price of oil right now in early April, West Texas is trading about $85 a barrel, which I think reflects some of those concerns from a geopolitical perspective and just the economy doing a bit better than thought. There's been some interesting data, not to go too far afield in terms of politics, where when gas prices are going up, incumbents don't really do well. So while you're spending money, we're spending money at the pump, and it still counts towards consumption or consumer spending. Every dime in extra, every dime that you're paying extra at the pump is a dime you're not spending on a cheeseburger or a T-shirt. So that dynamic could weigh on sentiment, spending through the summer. It's not going to be good. Not that I'm a political scientist for President Biden, probably going through the peak driving season, which is going to start with May and then end with Labor Day. So it's something that could weigh on the economy. It could weigh on sentiment. The Fed's going to keep an eye on it. And again, if you're the Biden administration and the presidential campaign is really going to heat up, you're probably hoping for a little bit of relief at the pump, and which they may not get as we get into summer. So just something that we're paying attention to.
Yeah, and obviously I dropped the political bomb into the conversation and then told you not to touch it, but it is interesting because you brought that up, how you get 4 years to be president and then you have to like fight for your life all over again. And right, wrong, or indifferent, this is not a political statement. This isn't a positive or negative for either side of the aisle. But I bet you it's going to be a narrative, because in 2021, at the beginning of close to the beginning of his term, the national average was below 250, close to $2.
Yeah.
Now, if we get into this peak season and they're right and it's over $4, I'm sure that's going to be.
Oh man, and that's what people. Yeah, no. When it comes to inflation expectations, which University of Michigan's studies and the Fed pays a lot of attention to, right? The feeling, the concern is always that expectations become self-fulfilling. If we think inflation is going up, we behave differently and we help boost inflation. And so usually, at least based on the research I've seen, inflation expectations are primarily set by what you see at the grocery store and what you see at the gas pump because of the frequency of those visits. And yeah, $4 versus sub 250 is going to be tough for the incumbent. And it kind of goes back to Reagan in 1980 and Clinton in 1992, which is essentially, are you better off than you were 4 years ago? And I'm not going to touch that in terms of yes or no, but I do think a lot of the way a lot of people answer that question, or one of the things they lean on to answer that question is, what am I paying when I fill up my truck? And that, I think that's going to be really tough for the Biden administration, and they're going to be working overtime to try and mitigate that, I think.
Well, and truck's the right language to use, not car. That's I actually saw statistics on how many people buy trucks versus cars these days. It's crazy.
Yeah, we got a truck.
Trucks. I do have a truck.
We just got our first pickup. Yeah, our kids love it. Yeah, no,
I live in the country, man. You have to have a truck when you live in the country. It's like
I don't live in the country, so I can't justify the truck, but I guess trucks are cool. The car I drive is 28 years old, so I don't even get to drive the truck. But the kids were like, "Can we get a truck?" And the car was off lease, and we needed one, and it's big and safe. And so I was like, "Okay." But I'm not hauling anything, so I'm happy to help haul stuff. But
you'll figure it out.
I'll throw something in the back. I'll throw something in the back at some point.
Awesome. Well, I'd like to wrap it up by saying this. Couple things on what we talked about here. When we talked about a look ahead in April kind of being a boring month, and we talked about gas prices and kind of looking at the short-term effect of your lifestyle, whether it's the cost of groceries or it's the cost of the gas pump. One thing that strikes me in all of that conversation, Tim, is there's a lot of people out there that think of the golden age and like, I wish it could be like it used to be, and it used to be so much better, and now we've got it so hard, and all these sorts of things. And there's a lot of Americans look back at the 1950s as kind of like the golden age. Like that's when everybody was buying homes, everything seemed affordable, you could live on one income, all that kind of stuff. That said, if you really look at the data as an example, and I'm rounding, and I want you to understand the concept, listeners, more than the exact numbers. But something to the effect of, in the 1950s, the average consumer spent 30% of their income on groceries. Today, it's 13%. In the 1950s, the average home had one car. Now the average home has two cars. The average square footage of a home was less than half of what it is today. We just lived a lot simpler lives.
Yeah. And
so it's not that it was necessarily better. It's just that we had far less expectations. Yeah. And so it's crazy how things change. And so I bring all that up because I'm an optimist. I'm a glass half full guy. We've got it very, very good these days. We're talking about how the market's up 10% in the first quarter of the year. But the other realization that should come out of that is that, as I say every month, and I'm always going to say this every month, investing is a long-term game, right? And so we have fun kind of bantering about what's going on in the short term. And of course, we want to watch that for maybe tax opportunities inside of portfolios or rebalancing opportunities. But at the end of the day, if you're going to get into the markets and be in the markets, it's not a gamble. It's an investment. Investing is a long-term game. So we're going to stick around for the long term and see the rest of this out with the money that we've got in these equity positions, and continue to use these very temperamental bonds for income these days. But Tim, as always, I appreciate you being here and the insights that you provide and these market commentaries that you put out for us. They're very helpful. And in May, we'll have some different things to talk about.
Yeah. No, it's good seeing you, Brad. Always great to be with you. Look forward to talking to you again next month, and go Hawkeyes.
Go Hawks. A great way to end.